Hi, everyone. Thanks for joining us. I'm Dan Goodstein. I head up ERPA AI and the Digital Enterprise Institute. And thanks for joining us for today's session, Powering Up the A and FP&A, Insights that Drive Action and Performance, sponsored by our friends at NextDime. Hope you'll enjoy today's session. You know, this is in a sense not a new topic. It's something that organizations have been dealing with and figuring out ways for efficiency and outsourcing versus insourcing for a long time, but there's been some new advancements, definitely a need for change in the industry. And so excited to have a panel of experts here to walk you through what's happening from our standpoint at the center of this large network that we have. Real quickly, for those of you that don't know us, ERPA AI is a professional association focused on automation and AI. We've got over 130,000 members worldwide, all coming to us for education, networking, and advice. We come from the outsourcing space, so we launched the Outsourcing Institute prior to ERPA back in '93, and recently launched our new brand, Digital Enterprise Institute, to cover enterprise transformation as a whole. Let me start by introducing today's speakers. We've got like I say, a great panel of experts. Vivek Tiwari is the Managing Director of Business Process Management at NextDime. Rohel Khan, Senior Advisor for ERPA AI, Digital Enterprise Institute, and the Outsourcing Institute. And Mark Lessem, the Executive Director of North America, also for NextDime. But let me ask each of you to kind of introduce yourselves and how you got here. Vivek, maybe we can start with you.
Thank you so much for that, Dan. My name is Vivek Tiwari. I have been in the industry for more than 25 years now, spanned the life cycle of finance and accounting, as well as BPS services across different firms, starting with GE Capital at the outset, going on to an HCL, an Indian-based company, through WNS for about a decade. And the last 5 years I spent with Accenture, the Managing Director for their operations and sales in the Middle East. I've joined NextDime 6 months back, and I'm progressing with the journey of the F&A operations for NextDime and head their BPS function completely. So that's a short introduction of myself.
Great, thanks. Looking forward to learning more. And Rohel, you're a senior advisor to us here at ERPA AI and Digital Enterprise Institute, but every time I look at your LinkedIn, I realize something else that you do. So maybe give everybody the updated version.
Yeah, no, that's it's good. It's good to be here again, Dan. I think the opportunity here is really to help think about what we're contemplating here. My background, I've been in business services going on 25 years, much like Vivek. I led two of the largest BPO organizations globally, about a good $8 to $10 billion segment of Xerox and a couple others as well. And it's all about business delivery. It's all about business outcomes, and the business that we're in is helping to drive performance for our clients. And I'm happy to be here and looking forward to digging in.
Great. And then Mark, I'll hand it to you. Give us a little bit of your background, and then I'm hoping you can kind of level set and give us a sense of maybe start a state of the marketplace before we jump into the discussion.
All right. First of all, welcome everybody. Thank you, Dan. Good morning, Vivek, Rohel, and everybody listening and watching today. Thank you. So my name is Mark Lessem, and I'll give you a brief background in the sense that I've got about 30 years experience in the business side of things. I started in finance and accounting, moved into sales marketing, and then some head general management leadership positions in a variety of companies, large cap and small cap, and even startup organizations. Most of my background is in the medical device, hospital supply kind of sector. Today, I operate as a senior executive director with NextDime. NextDime is a professional and business services company doing business globally. 40% of our clients are here in the US. We cross a variety of services, which we won't tap into here. And I reside in the Chicago area. So thank you for the introduction, Dan. And if you want, we can just jump right on in.
Sounds good. Thanks, Mark.
All right, I'll beg your forgiveness, folks. I've got about 9, 8, 10 minutes somewhere in there just to set the context for the presentation and the panel discussion that's going to follow. So we're going to run through a couple of these slides, and while you're looking at this one in particular and the next one, it is a little copy heavy. So here we go. In the past decade, we know that the FP&A function has undergone significant changes. They've been driven by factors such as advancements in technology, globalization, and increasingly complex and evolving business needs. For instance, FP&A has transitioned from being focused on historical reporting and variance analysis to becoming a strategic partner in decision making. With that, excuse me, With the available of vast amounts of data and improved analytical tools, FP&A professionals now play a crucial role in providing insights, conducting scenario analysis, and supporting strategic planning and forecasting. Now, as companies have expanded globally, FP&A leaders have developed a broader understanding of global business dynamics by adapting to newer forecasting models and addressing localized regulatory requirements, all the while maintaining consistency across the organization. With the changing landscape, the skill sets required to be an effective FP&A person have also changed. In addition to traditional finance and accounting skills, FP&A professionals now must possess strong analytical capabilities, data literacy, and have a strategic mindset. They must also communicate effectively and collaborate with cross-functional stakeholders. Additionally, FP&A has a more prominent role in risk management. Identifying and assessing financial risks such as market volatility, currency fluctuation, and regulatory changes is simply vital today. Integrating risk analysis into forecasting models and providing insights to mitigate potential risks and uncertainty is now considered table stakes. FP&A has shifted to a more holistic approach that incorporates non-financial drivers and key performance indicators. There's an increased emphasis on measuring and monitoring operational performance, customer satisfaction, and other non-financial aspects that do impact financial outcomes. This broader perspective allows FP&A to provide an insight beyond the traditional financial analysis. Now, the A in FP&A continues to evolve, giving decision makers better data from which to base strategic choices. The typical finance organization now spends about 10% more time and resources on FP&A activities compared to a decade ago. However, a major challenge finance leaders face is the lack of confidence in their existing data. According to recent studies, a staggering 70% of them simply do not fully trust their data, as much of that is managed using traditional spreadsheets. To drive transformation, CFOs have identified their top priorities for the finance function. First and foremost, they aim to establish finance as a true business partner across the enterprise. About 47% of CFOs consider this their primary goal. Second, conducting analysis with the help of intelligent automation has caught their attention. However, the strategic decision-making process still requires strategic decision makers who, with the deployment of intelligent interventions, will have better data to make more timely and impactful decisions. So the full potential of the FP&A function can be realized by integrating agile practices with competent practitioners. Doing so has demonstrated impressive results, including 80% reduction in planning time, up to a 95% improvement in forecasting accuracy, and the liberation of 12 hours per week that can be redirected to higher value work. To achieve success in the evolving FP&A function, it's crucial to establish a strong framework. Three key pillars of this framework are bandwidth, competence, and partnership. Now, allocating resources according to your unique business demands, which of course are going to vary by company and industry, is simply essential. Forecasting for short-term and long-term projects, supported by scalable technological interventions, can ensure workload management. As investments made into FP&A resources, it's important to evaluate individual competence. To build a holistic team, the FP&A function should attract and retain team members with differentiated skill sets. The responsibility of the leader is to provide continuous development opportunities and emphasize that FP&A is not limited to its traditional core competencies. To achieve a true partnership, FP&A leaders should strive for a model that's fully integrated with the entire business, as opposed to a model where FP&A is perceived only as an information gathering and reporting resource. This requires gradually building stronger relationships with stakeholders across the organization. FP&A professionals should proactively reach out and learn more about the concerns and priorities of other departments, while taking advantage of those interactions to explain what's in it for them. This integration leads to valuable insights and ultimately contributes to the organization's success. So Benjamin Franklin once said, "The only certain things in life are death and taxes." And to that, we should add technological advancement. cloud migration, automation, artificial intelligence, and most recently, generative AI. They're changing the game, making plans, budgets, and forecasts more accurate and financial analytics more powerful. Financial leaders who embrace these technologies have a significant competitive advantage. It never surprises me how many organizations, Fortune 25 and emerging companies alike, continue to use manually powered Excel solutions simply because they're comfortable doing so. Investing in next-gen technology, like death and taxes, should be a given. For instance, cloud-based solutions provide access to more big data sources than their on-premise counterparts. They also offer advantages such as easy and anywhere accessibility, increased security, smoother collaboration, scalability, and they're cost-effective. These advantages explain why they've already been widely adopted. Furthermore, FP&A tools augmented with AI and machine learning are emerging to be hugely beneficial. These options dramatically improve the accuracy of financial forecasts and can uncover trends, patterns, correlations, and insights that might otherwise go unnoticed. Interdepartmental communication has been made much easier via collaborative planning tools such as Teams or Slack. These tools have been proven beneficial in day-to-day business by driving engagement, accuracy, and efficiency in the planning process and FP&A organization. So the expectation from FP&A has shifted, requiring finance professionals to become strategic partners and trusted advisors to the organization. What can the FP&A leader do to meet this higher expectation? First, they need to look at amending metrics that their teams are working on and emphasize an analytical approach. In order to do so, routine tasks should be driven by technology. This releases bandwidth to perform more value-added tasks. Second, they should analyze and present data with the help of interactive real-time dashboards. Here, it's important to align the visualized KPIs with short and long-term business objectives to ensure that they drive performance as business circumstances change. And last and most importantly, they should work toward achieving a synchronicity between people, processes, and technology. It's important to invest in developing your FP&A team skills, ensuring that they possess both financial acumen and data analytics expertise. This means having an efficient analytics platform and people who can demonstrate good judgment to effectively interpret the reams of new data. These people must have the ability to go beyond routine analysis. They must also be able to solve business problems and make informed recommendations. Streamlining and optimizing the FP&A processes promotes efficiency and effectiveness, enabling seamless collaboration and timely decision-making. So I've hopefully set the context, and with that as a backdrop, Dan, it's my pleasure now to invite you to kind of moderate their expert panel, and to the audience, you'll be prompted, and I invite you to submit questions as prompted.
Yeah, sounds good, Mark. Thank you. Good kind of level set. So before we jump into kind of the panel discussion, I wanted to set a poll for the audience. For those of you watching, if you could kind of let us know, where are you on your transformation journey? Have you not started? Have you just started? Are you kind of halfway through or in the midst of it, or is it near completion? Notice none of the choices are we've got it all figured out, because I've yet to see that one. But Rohail, a lot of the conversations we have around transformation journey, people are kind of stuck in between, B and C, and trying to figure out how to get to scale, right?
Yeah, no question about it, Dan. I think unfortunately we see a lot of failed experiments, let's call it that, right? That a lot of energy when you start, only to realize that, wow, that wasn't as easy as I thought, or we may have targeted the wrong things, or there's no ROI, right? And part of that comes back to, I'm sure what we'll get into in the panel discussion, is this idea that you have to have a vision before you start your journey. You can't just do a ready, shoot, aim, right? And unfortunately, I see a lot of ready, shoot, aims in terms of these failed experiments.
And why is that? I mean, we're going to get into a little bit here, Rohail, but what are some of the big culprits?
Well, I'll tell you, Dan, it's interesting, right? When you think of FP&A and you think of, historically, it's been very transactional. So people think they understand the transactional nature, which for many of them they do. The problem is we're now evolving to, and Mark referenced this a little bit, right, in his overview, right, that we're now evolving to more of an impact, outcome, and risk mitigation focus. And that means that transactional stuff has to happen, but you have to be thinking on a multiple level, right? And so that means you have to baseline volumes, you have to baseline the understanding, you have to understand what are the risks you're trying to solve for. That means a detailed understanding of the workflows, the processes, and most critically, the data. And the data that drives the insight is the underpinning of an effective organization from a finance and accounting perspective. Unfortunately, what I've seen in a lot of these debriefs of these failed experiments that were called into review is they either targeted the wrong set of processes, they didn't have baselines in place, they didn't understand the volumes or the redundancies or overlap of some of the challenges that inherently were there, because as people were trained or brought on board, they had variances in how they were actually executing the processes. All of that comes and hits a brick wall when you're trying to automate something, because as an organization, you think you're automating everything. You only then find out, you realize that you're only automating 12% or 20% of the volume, because the other 80% is happening differently, right? Yeah. The sequence is different, the workflow is different.
So let's see the results. It looks like a little more than half the audience has just kind of started their journey. A third have not started, and a very small percentage are half or more of the way through. So not surprised by that. Hopefully this session gives you some insight. So Vivek, maybe I can start with you, just at a high level. You talk about FP&A. How does this function evolve as a business grows?
Well, if you look at the evolution of the F&A function, you look at and just adding on to what Rohil just mentioned, right? It's scoping the function to make it fit for purpose, right? And it's continuously evolving. You have expanding scope. You have sophistication of financial models. You've got strategic decision support, which needs to come out of this. Enhanced reporting and analytics is something which is key. And this is rather detailed, right? Integrated financial systems, cross-functional collaborations, compliance and risk management. And I'll kind of expand a bit on all these themes. If I look at expanded scope, we said some of this was more transactional in its outset. It is now being used to expand in scope to cover additional areas and departments within the organization. High-level financial planning and budgeting is there as usual, but as the business grows, it needs to possibly incorporate more granular analysis, including products or service line, geographical regions, or specific business units. The second one, which I spoke about, which is sophisticated financial models. With business growth, the FP&A teams need to develop more sophisticated financial models to accurately forecast and project financial performance. These models may include complex revenue, cost drivers, scenario analysis, sensitivity analysis, other advanced techniques to support strategic decision making. Strategic decision support, and this is an important one as organizations evolve, as they grow. This involves analyzing data, identifying trends and patterns, conducting profitability analysis, evaluating investment opportunities, and really aid in the decision-making process, as opposed to just creating a report. Enhanced reporting and analytics, I think that is rather self-explanatory, but the FP&A teams need to possibly leverage business intelligence tools like data visualization techniques, dashboards, to provide actionable insights to the management. I spoke in brief about integrated financial systems. Growth often necessitates the integration of various financial systems and technologies. The FP&A function plays a crucial role in implementing and managing these systems, ensuring data accuracy and consistency across different departments and systems. The integration enables more efficient and accurate financial planning, budgeting, and the reporting process. Cross-functional collaboration as a group, it doesn't just relegate itself to financial professionals and the finance department. We need to closely work with other departments such as operations, sales, marketing, the HR to understand their financial needs, align objectives, and provide financial insights that support overall business strategies. Lastly, I would touch very briefly on compliance and risk management. With business growth, FP&A teams face additional compliance requirement and risk management challenges. They need to ensure adherence to regulatory guidelines, accounting standards, and internal control processes. FP&A professionals often collaborate with internal audit, legal, and compliance team to mitigate financial risks and ensure regulatory compliance. So as organizations grow, they've kind of have the F&A functions also. FP&A functions grow into doing all of these activities.
Rohel, anything you would add?
Well, that was pretty exhaustive, but I do think that the reality is the nature of the value that the finance teams are offering, if I had to sum it up, is changing. It's about impact, risk, and outcome. It's not about the transaction. That's a given, right? Business leaders in this environment need to be able to understand the insight that drives performance.
Yeah. So, Vivek, I'm curious, you've worked with small firms in your career, you've worked with large firms. Maybe, what are the differences, right? The smaller firms, how do you kind of help them scale? And for larger companies, how do you make that kind of growth sustainable?
Sure. For small business, you have, so I'll again break that answer into a few components. Starting with smaller businesses, you have the regular budgeting and forecasting. So FP&A helps small businesses establish realistic budgets and forecasting by analyzing historical data, creating market trends and industry benchmarks, by setting achievable financial targets and regularly monitoring performance against the same. From a cash flow management, you ensure effective cash flow as it is critical for small businesses. FP&A can further assist in forecasting cash flows, identifying cash flow gaps, and developing strategies to mitigate cash flow challenges. And then by closely monitoring cash inflows and outflows, small businesses can optimize working capital, making informed investment choices, and ensuring sufficient liquidity for growth. Next, for small businesses would come pricing and profitability analysis. FP&A can conduct detailed pricing profitability analysis to help small businesses determine optimal pricing strategy, understanding products or service lines profitabilities, and identifying areas for cost optimization. This analysis helps small businesses make informed decisions regarding product mix, target markets, pricing adjustments to maximize profitability. The last one I'd like to touch upon for small businesses specifically is investment analysis. FP&A can and does support small businesses in evaluating investment opportunities, expanding into new markets, launching new products, services, acquiring assets or businesses. This is obviously done by conducting financial feasibility studies, evaluating return on capital, performance assessments, also providing insights and guides to investment decisions. Now, I would go into larger businesses, as you alluded to. The difference becomes slightly in terms of how it plays out. Strategic planning and decision making. So for larger companies, by conducting comprehensive financial analysis, scenario modeling, sensitivity analysis, FP&A provides valuable insight for evolving growth strategies, assisting financial impact of different scenarios, and making more informed strategic decisions. Performance measures and KPIs tracking. FP&A establishes key KPIs or key performance indicators and develops strong performance management systems to evaluate the financial and operations performance against those targets. This enables management to identify areas of strength, inefficiencies, and opportunities for improvement, driving sustainable growth. This is highlighted very specifically for large organizations because managing large organizations more independently, KPIs become very, very key in terms of its delivery. Capital budgeting and resource allocation. FP&A helps large businesses allocate resources effectively by evaluating investment opportunities. Why they do this for the small organizations as well, it becomes a little more important here, since you prioritize capital expenditure, conducting capital budgeting analysis, etc. And this also ensures that financial resources are allocated to projects basis highest growth potential and long-term sustainable value. In case of merger and acquisition, FP&A plays a big role in M&A activities, including financial due diligence, value analysis, valuation analysis, synergy assessment, and integrated planning, therefore forming the backbone of a potential merger or acquisition. And lastly, from a risk management scenario, FP&A assesses financial risks, performs stress testing, and develops contingency plan to mitigate potential threats to sustainable business growth.
So, Rohail alluded to this, Vivek, but why now? Why is this timing so critical and urgent for FP&A leaders to adopt technology and make sure that they drive value? Why now?
Well, honestly, I would say, it's not just FP&A leaders. Technology adoption and adoption of the new age working or human machine orchestration is a norm today, not just in FP&A, in any functional department per se. That having said, specific to FP&A, I would just highlight a few things which kind of stand out, and these are strategic decisions I've already brought out to the fore. You have enhanced data accessibility and accuracy, and I don't need to elaborate on this because with the accuracy of data, the potential of strategic decisions being correct is so much valuable to the firm. So technology adoption is so much more imperative. Advanced data visualization and reporting as a key to senior management, again as an enabler to make all the decisions for the firm's growth, revenue, and the future sustainability of the business. Improving the analysis and forecasting capabilities. To a lower extent, process automation and creating gains, creating efficiencies in the process while error-proofing it, and making it not just better from a commercial standpoint, but also making it very viable and future-proof. It also enables better collaboration and decision-making, and the ability to conduct scenario analysis and sensitivity testing becomes so much better. So, in a nutshell, I would answer that question in terms of technology adoption is a given today in any direction, in any process that you would run, but it is so much more important in the FP&A function. Very quickly, I'd also highlight, the negative consequences of not adopting this as quickly. So, you'd possibly risk delayed decision making and inefficiencies due to manual data, limited insights and forecasting accuracy in question, increased risk of errors in FP&A reports and modelings, challenges in times of reporting and responsiveness to market changes. And the market is evolving very quickly, as we all know. The competitors are all running and kind of keeping at pace with new technology, and therefore it's imperative for a business sustenance in the long run. And lastly, inability to adapt to changing business environment and proactive decision making. So, I've tried to highlight the positives in terms of by adopting technology, what would happen, and also the flip sides of not doing it or not doing it soon enough.
Sure. So Rohail, let's pivot kind of to automation and AI specifically. You work with a lot of our members and beyond around kind of bridging this gap. What are some of the best practices you've found for integrating automation and AI into FP&A?
Well, so a couple of things, and it kind of builds a little bit on what Vivek was saying. The idea is that organizations, bottom line, they struggle with understanding the data that drives their business performance. Bottom line, that's the challenge. Big business, small business, same thing, right? It's a little more complex at the top end, but it's the same thing you're trying to solve for. They're going to look to find out how to reduce things like DSO, vendor risk, supplier risk, things like that. So when we engage with clients, one of the biggest challenges we have first is, do you even understand what you're solving for, right? If you don't know your destination, you're not ready to take the journey, right? And that's a simple concept. You would be shocked and amazed at how many times people think they know what they think they need to do, but in essence, they really don't. Because, I sat with a large Fortune 70 company, met with their CFO, and they said, look, we're automating and we're really on this journey and it's fantastic. We're ready for tier 3 automation. I said, fantastic. Well, tell me what you guys are doing. And she went on to describe the fact that at month end, quarter end, and year end close, they have 300 analysts that are using the macros on their spreadsheet, on their Excel sheet. And she stopped. And I said, oh, okay, she's probably describing yesterday's solution, and she's going to talk. No, that was their tier 2 automation. And I said, look, you know, I was very honest about it, but I said, look, that was great automation in 1990. It's not great automation today, right? And therein lies the challenge. Now, it's not their fault. The problem is they're limited almost and almost blinded by their own blinders, right? They know what they know. The challenge is they don't know what they don't know. And I think that's where organizations like Vivek's and consulting like we do helps them see the unseen. And I think the biggest challenge is if you don't know your destination, don't start the journey. If you think you know your destination, let's baseline performance and understand that any level of automation, in fact, I would, you know, I've said this to clients a lot, picking the automation solution, like the platform or the software, that's easy. It's integrating it into the processes and the workflows, that's hard. Maintaining the automation, that's hard, right? People unfortunately have it reversed. They think the hardest part is picking the solution. You could pick any solution, quite honestly, right? You know, the team of that Vivek has is a great solution. It's very integrated. It's a great solution, right? That coupled with an understanding of what I as a client am trying to accomplish makes it a lot easier for their teams to actually deliver. And that, I would say that's the biggest challenge, is they think they're ready when they're really not, and they need to be able to be guided. Because and I see this right now with generative AI, right? We've developed generative AI solutions to drive order to cash, procure to pay, AP/AR, supplier risk. Everybody I talk to thinks, oh my God, AI is going to eliminate every finance accountant. It's going to eliminate all of our jobs. ChatGPT is going to take over the world. And the reality is, yeah, no, we're not there. And we may never get there. It's going to be transformative, but you have to understand how tools like that integrate into process and integrate into workflow. That's critical.
So once you get past that initial phase, Rohel, and I know you do a lot of that around, you know, your favorite expression that we use all over the place, and I think I keep hearing it other places now, so I think it's getting traction, is meet them where they are, right? But let's assume you kind of have the baseline, you figure out, you know, kind of where to start, what the benchmarks are. The next phase, if you will, for the people that were kind of halfway through their transformation, what are the hurdles there? What are the biggest challenges once you've started implementing some of these things?
Yeah, I would tell you, as a practitioner, I've been a practitioner for over 20 years, right? And dealt with probably 1,100 of the Fortune 2000 as part of our client base. And the biggest challenge is once you get the momentum, the hardest thing is keeping that momentum. And so I would say in the construct of that journey to continue, there has to be a notion of continuous improvement and continuous assessment, right? Once you've automated a portion of the activity, kind of call it the baseline set of actions, what you've now just done is taken those off the plate, and now you need to go to the next level of complexity, the next level of data, right? And the most successful organizations I'm seeing are ones that realize that the journey never ends, it just evolves, right? And so it's looking at that next set of activities, it's looking at that next level of complexity that really drives their next level of performance and outcome. And that continuous journey has to be anchored in risk, impact, outcome. At the end of the day, that's what investors care about, that's what boards care about, that's what owners and C-level executives care about, because they're all aligned. That drives business performance and eliminates business risk or mitigates business risk. And so that journey that they're on, it's not a point in time and you're done. And AI is a perfect example of that. It's kind of creating an inflection point. So all of the people who've automated a bunch of things, all of a sudden now AI comes in and it's the next level, right? It's the next set of opportunities. That's, I think, the biggest challenge that organizations have is they think it's like an SAP implementation. I do it once and now set it and forget it. It's not that way at all.
So walk us through a couple of the top use cases, Rohel, around automation and AI. You know, one of the ones that comes to mind is kind of improving the accuracy of financial forecasts. How do you see that playing out?
Yeah, I think that's, you know, Vivek talked about that, right? I think the biggest challenge for public organizations is I have to be able to look at my, so I've got a client right now, it's a large technology company, right? One of our clients at IRPA, and their biggest challenge is demonstrating to the street their conversion of their pipeline. It's one of the questions the analysts ask all the time, every quarter, like clockwork. What's your pipeline backlog? What's your conversion, right? The problem that they've had historically is because of the fragmented nature of the data, their answers were kind of loosey-goosey, right? And as anybody knows who's either watched or listened to an earnings call, or unfortunately had to be the one delivering the narrative on the earnings call, if you make a mistake, wow, you become the forever meme. I think that's the problem, right? That you're memorialized. And so the problem they had was, how do you build confidence? As we've helped them put this in place, we're now helping them be much more precise. They're still not going to give away all of the information because that's competitive information, right? You're not going to tell all of your competitors what your conversion rates are, but their ability to continue with a storyline that has a level of continuity and predictability internally is much more powerful than they've ever had the ability to do. Now they can talk about why conversion isn't happening, because the data is giving them that kind of insight. And so that's one use case that we've had where we're talking again about risk, impact, and outcome. And the processes that we're automating are those that are related to a critical function or workflow that drives business performance, which is pipeline conversion.
And how about trend analysis, identifying trends, patterns in financial data?
Yeah, absolutely. So it goes to that, right? So one of the offshoots of that pipeline conversion is understanding why pipelines aren't converging, why that conversion isn't happening. Is it a process execution issue? Is it a funding issue? Is there problems with contracts, right? Are the terms, the T's and C's, or the deal models that should have been used not used, right? So there's a series of components, right? Consequences that can be modeled, right? And then to your point around trend data, one of the biggest things around pipeline conversion, it's the lifeblood of this organization, right? They're both a software and a product company. So they've got conversion pipelines in both areas. Now the product is contractually bound for a period of years. It's a license model, right? It's a kind of a lease back model. On the consulting side, you're selling that revenue either on a project basis or on a rate card basis every year. So the ability to predict and project that dollar revenue in each of those functions is a consequence of the intelligence that you have, right? What are my past conversion rates? What are my past take rates, right? What are these organizations from a process maturity perspective focused on? And how does that enable the sales team to lead the client beyond just the transactional interaction to more of a, call it an outcome-based kind of program, which is more revenue and more value.
So before we get into the next part of the conversation, I want to do one more poll question for the audience. So if you could let us know, those of you watching, how has, if at all, how has generative AI specifically impacted your strategy? Not at all slowed us down, increased the urgency of our execution, or caused us to pause and assess the impact on our program approach. Vivek, while we're waiting for the results, I'm curious, the clients that you guys are working with, there's always this interesting kind of hype cycle with these technologies that gets people excited. But when you actually speak to clients, where are they on this? Vivek, are you there? Do you have a thought?
Sorry, I was just coming off mute. Yes, if you look at how it has evolved, I think it is more of individual clients and their particular journeys. And Rohil alluded to this, right? There are certain areas where people already are going with assumptions, saying, I know this all, I know how to deliver this, and possibly go in with predetermined solutions to the problem which don't lead to success. There are clients which have weighted the journey, understand the journey and where they're trying to get to, and therefore they have a roadmap to success to take them there. Obviously, there will be certain stumbling blocks in the roadmap, but they will kind of navigate those challenges as they come and as they present themselves. Then there are clients who are kind of in the landscape of still mulling, because every CEO conversation today is talking about analytics, AI, impact of AI on FP&A, on the holistically on business processing as such. And therefore the journeys are very independent in different client scenarios, as maybe we see after this poll really done. Clients are in various stages of evolution, the way I'd put it.
Yeah. So it looks like about almost half the audience says it's caused them to pause and assess impact, which, you know, is probably probably a good move. And then a third not at all, and a third increased urgency. But yeah, I mean, this is one of those where, yeah, I wish you could select multiple, because the reality is it's probably a few of these things. So, you know, as I mentioned, right? I mean, I'm always intrigued by, you know, the difference in client perceptions and expectations going into a conversation, Vivek, and the realities of things. What are some of the myths that, you know, you guys see that maybe, you know, about the industry that people should be aware of?
I think, you know, there are several actually. If I were to look at specifically what people assume, you know, you have people assuming that analytics is something which is solely a retrospective exercise. Now, you know, while analysis involve reviewing historical financial data, and it proposes extend beyond the past, right? FP&A analysis evolves and involves assessing current performance, identifying trends, providing insights to guide future decision making. So it's not a retrospective exercise the way I see it. You know, it is more real time, but there's a lot of misconception saying it is a retrospective exercise. The next one is analysis is just purely a number game. Effective analysis in FP&A actually involves more than just numbers. While financial data from the foundation is essential to complement quantitative analysis with qualitative insights, understanding market dynamics, industry trends, customers' behavior, and other non-financial factors is crucial to provide a holistic view and making informed recommendations. I would here allude to, you know, what Rohil just mentioned right now. It is not about AI or a particular tool giving us a be-all and end-all, and it probably may never be. We also see human-machine orchestration in which realistically decisions of this sort would involve the human strategists to kind of, you know, make the decisions after what AI produces as an analysis. So, you know, that's another big one. The next one I would like to highlight is analysis always precise and definitive. So, you know, it's reliability just on those data points. While the aim is to provide accurate insights, it is important to recognize that analysis carries inherent uncertainties and risks, and therefore it has to be, you know, it has to be used quite judiciously. Next, I would go on to say analysis is a one-time event. So effective FP&A analysis, in my mind, is an ongoing and iterative process. It requires continuous monitoring, evaluation, and adjustment as new data becomes available or business conditions change. Analysis can replace judgment and experience. Again, you know, I'd like to highlight this. I've possibly spoken about it a bit, and so has Rohil, but numbers would never replace judgment and experience, and therefore, you know, the valuable insights that we get by virtue of the analysis, it has to be interpreted in the context of business conditions. We may have touched on this before, but, you know, I'd give it a different kind of sub-bullet on it and mention analysis guarantees accurate predictions. It would not. Data of yesterday may be dated to the circumstances of yesterday. That's the way I'd put it. Yeah. Two other things I'd quickly touch base on is AI is only about robotic process automation, and this is more pertinent to the FP&A space because really that's step one in the program. So it's not. It is just a step in terms of the total human-machine orchestration that we spoke about. And the last one, you know, I'd like to just, this is a controversial one really, but I'd like to broach it a bit, is AI is still very much in the future and it has yet to become reality. That's not really true. You know, we do see AI, it's not a distant dream, but we're seeing a lot of it impact virtually our daily lives. Forbes affirms that AI helps filter out unimportant and potentially harmful content from our email boxes. So we all have experienced this. Netflix is employing AI-powered recommendations to personalize algorithms to provide engaging and relevant content. It's happening as we speak today. AI aids in adding closed captions and subtitles to PowerPoint presentations. We all have started using it. Technology AI is stable and mature now. So, these are certain myths which are prevalent, and they're getting dispelled as people experience some of these more live and on the face.
No, great. So I forgot to mention before, for anybody watching, if you have any questions for Rohail or Vivek or Mark, please go ahead and begin sending those in. There's a questions panel as part of the GoToWebinar control panel. Go ahead and send those questions in. Rohail, we talked a lot about the opportunities. What about some of the potential risks in using technology like automation and AI in this space?
Well, it's interesting. Automation is great, but if you're automating the wrong thing, bad things happen faster, right? I mean, that's the bottom line, right? And it's interesting. I sat with a regional bank, and just gives an example of how not to do something, right? So, really good, nice sized regional bank. They had automated in their servicing environment for the mortgages, but they hadn't had any ROI. So I sat with the CEO. He said, "Look, we spent about $6 million on this program. I'm frustrated. There's nothing to show for it." And so I said, "Well, give me a couple of days. Let me assess kind of what you guys have done." So as I assessed it, I came back to him, and it was just he and I in the room, which was good. I said, "So here's the insight, right? From what I gathered, you guys effectively automated loan payoffs." Now, I ran the internal services company at Bank of America, so I know exactly what it means to have a loan payoff. It's a painful process. I said, "So let me ask you, why did you look at loan payoffs as your target?" And he said, "Well, I told the team, just go ahead and automate what you think is important, and then let's go." And I said, "Well, they did, but they automated something that was a nuisance for them, had nothing to do with your client." I said, "When I was at Bank of America and somebody had a loan payoff request, I made them talk to as many people as I could in wealth management, at Merrill Lynch, right? Because they just got a financial windfall, and you want to make sure that you can guide them in investing that windfall." I said, "What you guys did is you made it so easy for a client not to talk to anybody. They've just had a financial windfall, and literally they are escaping your bank, and they're going to go to somebody down the street or somebody else and do a financial transaction." And he looked at me and he was shocked. It was not rocket science, right? But he trusted the team to do something that was focused on the client. What did the team do? Which naturally most teams will, is they automated something that was a pain in the backside for them. Because doing a loan payoff, you got to go to multiple systems, multiple platforms, multiple data sets. It's awful to do, and it's painful to do as a processor. But it doesn't drive revenue, doesn't drive EBITDA. In fact, it eliminates assets on the balance sheet a lot faster. So that's an example of a nice idea, wrong execution, because the lens should have been client, borrower, P&L, outcome, relationship. Should have been something else other than how much of a nuisance is it internally for our teams to do this work? Let's automate it because it makes my life easier. But in fact, it becomes a counter to revenue and profitability for the organization. And that's that. I mean, I share that real brief example because, to your point, Dan, it go back to what I said. If you don't know the destination, you're not ready to go on the journey, right? And executives have to also understand that the impact of automation is speed. That's great if it's a positive thing, not so great if it's going to generate a negative result.
Yeah. So I want to take some audience questions. Again, if you have questions for the panelists, please send them in. I'll try to get through as many as I can. And then Vivek, Rohail, maybe you guys can both jump in on these. Vivek, maybe I'll give the first one to you or start with you. What advice would you give someone starting out in a FP&A career?
Take a second to come off mute. So yeah, okay. Well, I would say there are a lot of things, which I'd like to kind of, point out, what the individual should be doing. And these are, some of these would be, typically someone from starting an FP&A career, ideally concentrates on doing a master's in finance and accounting, understanding financial statements, budgeting, forecasting, and financial analysis technique. The more new age one is to, be able to use technology, learn to use financial software, Excel, etc. Maybe a little bit dated today. Visualization tools and ERP systems, get familiarity of those. Improve the analytic skills, enhance the ability to analyze finance data, identify trends, and provide insights. Communicate effectively. This is an imperative in a lot of functions, not just in FP&A, but learn to present complex financial information clearly, in an articulate fashion to various stakeholders. Stay informed, keep up with trends, regulatory changes, and emerging technology. Collaborate, work with other departments, align financial plan and business objectives. Learn continuously, seek professional development opportunities, stay current and stay open to feedback. And lastly, some of these resonate with not just FP&A, but largely for someone starting out anew. Build a strong network at the foundation, build relationship with colleagues, mentors, industry professionals for insights and opportunities.
Good advice, Vivek. Rahel, anything you would add?
Yeah, mine's a lot simpler. It's think like a business owner. Think about risk, impact, outcome. If you focus on those, you'll focus on the things that drive performance, and that way, by default, you're going to be invited to the room because you're helping people think about outcomes and mitigation of risk.
Next question, Rahel. You talked a bit about minimizing risk. What additional controls would you suggest being deployed to minimize that risk in FP&A?
Well, I think it depends on, quite honestly, it's going to depend on the client business and the industry vertical, right? There's going to be heavily regulated industries like healthcare and financial services that have got, you look at financial services with Dodd-Frank and the KYC requirements, right? Anti-money laundering as a requirement. I mean, if you just double click on that, there are inherently risks and controls embedded in the process itself. And the ability to understand the data helps determine, how quickly the organization's is on the right line or on the right side of that line, if you will. I think for organizations or industries that are not as regulated, there has to be this notion of, again, and I keep coming back to the same thing, think about the impact to your customer. So if I'm a CFO, I'm thinking about the broader impact to the business, the clients, the stakeholders, the channels we use, and that then gives me an outside-in view to understand what are the systems, what are the reporting, what's the data and the analytics that I need to be able to serve those channels or those partners as effectively as possible, but also manage the interaction with them as quickly as possible. And I think that's I think the evolving role of finance is helping to kind of establish some of the guardrails that businesses need to adhere to, especially in environments like today, where cost is king, cash flow is critical, vendor and supplier risk is the norm, and it's not this wild west that we were in back 10 years ago when money was free, interest rates were 1% or less, right? And everybody was kind of going all hog wild, right? The discipline and the structure is, I think, where the FP&A side can help businesses perform. A lot of businesses, unfortunately, view finance as a anti-selling device, right? Which goes to Vivek's point around building those relationships. If you're aligned to outcomes, the business invites you in the room. If you're a detractor to the outcome, they'll find a way to ignore you, or they'll try, right? And that doesn't serve anybody.
Vivek, any other controls you would suggest?
I would say control in terms of starting a process of transformation. This is slightly different from the process controls that we spoke about, right? Rahel referred to experiments or failed experiments earlier in our conversation, and I would say determining the journey is exceedingly important while laying transformation journey roadmaps. Understanding what it will take to get there. Automation for the sake of automation. And I say this with a lot of conviction because I've seen it in a lot of client spaces where we've had literally a landscape created to get to a certain level, and then realize that after a lot of expenditure of money, trying to put in systems, and while they kind of execute and the benefit comes out, the large realization is $1 million spent is not worth for a 2 FTE gain. Yeah. Right. So the risk of over automation or automating very basic stuff which might not be relevant to automation, it is important to figure as a part of FP&A or other programs, what does it really mean, and what are the focal points of what need to be automated? Does it fit into critical mass? Does it fit into the critical mass analysis? Does it give you the requisite benefits coming out of automation, or is automation for the sake of automation? So,
Yeah.
those are large things which play out, especially in creating a transformation journey and the FP&A transformation journey for the organization.
Yeah, Rahel, there's a question here about ethics and responsibility, which is, very much in the news these days with all the generative AI, ChatGPT stuff, and now with Supreme Court, affirmative action, hiring practices, diversity. Is this a concern for FP&A professionals? Is there things that we have to do to think about how to use RPA and AI in an ethical and responsible way?
Yeah, there's no question it is, and you touched on something that's important, Dan, right? And you see it when you're picking up looking and listening to news reports, right? With BlackRock and Vanguard driving a lot of focus on ESG, DEI, right? Those diversity, equity, inclusion, and the kind of social governance requirement in terms of environmental as well, right? And the problem is right now, the legislative environment is always late, right? AI is moving at a pace that is changing. And the regulators, I mean, all you have to do is if you think back to the congressional session where the CEO of TikTok was being, there was an inquisition and he was there. It was laughable, right? It was laughable, unfortunately, because the very regulators or the people who were there to question him had no clue what TikTok did and what there was. How do you regulate what you don't understand?
Oh, the same thing with the Zuckerberg one, the Ticketmaster one. I mean, over and over. Right?
I mean, it was a bit of a clown show, right? I mean, it was a train wreck to watch, right? And now think about AI, which is TikTok on steroids, right? I mean, that kind of a capability, and this is the group that's going to help establish guardrails. You're kidding, right? So I think the challenge is organizations and finance professionals and organizations with an ESG focus have to start looking and questioning what is the ethical boundaries, right? What's that fine line? What's the gray area, right? Because right now there's not regulation around it. It's a free-for-all, and it's hard to walk it back, right? And so, if, a lot of the coaching I'm giving CFOs right now is saying, look, you want to be very thoughtful about your pace, and you want to be thoughtful about how and what you're doing. Keep the focus on impact, risk, and outcome through the lens of your client, the regulators, and anybody else who's an external third party, because they're going to have the hammer, and you don't want to let them hit you, because it becomes painful when you do.
Vivek, I'll leave you with the last word. Any final words of advice?
Well, Dan, I would just like to echo what Rohil said right now. I think, it's not just finance. I think it's a very, very complex ecosystem, right? From the start of contracts, right? What is generative AI? The way contracts are, is it kind of preempting a particular line in a particular contract? The way it kind of goes in structurally, right from inception of a business relationship through on to FP&A. There's this is still uncharted territory, to be honest. And this is a territory in which businesses will have to conduct themselves as ethically as possible, understand key inherent risks, involve AI specialists in the decision-making process, and understand what can and cannot be used in terms of conducting the business in ethical ways. And it's an evolving landscape, really, as we speak today.
Well, that's about all of our time, gentlemen. Thank you so much for your time and your insights. I really appreciate it. Vivek, Mark, and the team at Next Time, thanks for supporting this initiative, as well as many of the other initiatives that we do. Rohel, always a pleasure. If you're looking for more information or you didn't get a question answered that you'd like some help with, please reach out to us. We'll get it to the right person here. I'm sure the Next Time team would also be happy to walk you through some of the things they're doing with their clients in this area. But we're here to help, so please reach out to me or my colleagues, and happy to facilitate. In the meantime, have a great afternoon and great rest of the summer, everybody. Take care.
Thank you all.
Take care.